Hey everybody, this is John and welcome to the free video. So depending on what you were trading today, it was either very quiet or very volatile. What we had today was a one-day massive rotation out of tech, okay, and into financials. So the S&P 500 ended up holding very, very steady and was very quiet. And if this was the only thing you were looking at, it's like, oh my gosh, what a boring day. If you were looking at financials, you said, wow, this thing's on fire. Look at all the volume that's coming in. You know, it's up over 2%. But then if you're looking at tech, it's like, oh my God, look at all the volume going out, and it's also down 2%. It was one of the more clean sector rotation days I've seen in a while. Usually it's a lot more subtle. Usually it's something that could last over the course of 4 to 5 trading days, and pretty much today it was all done in one day. I anticipate that the volume is going to contract significantly tomorrow. So where was the money coming out of? Well, the number one holding of every hedge fund in the United States, or the number one holding of the greatest number of hedge funds in the United States is Facebook. Okay, and they're looking at tech going like, well, we need to start rebalancing our tech and get those financials in place because we're underweighted in financials and overweighted in tech. What do we sell? We sell our biggest stocks. So Facebook, the FANGs, they all got hammered today. And so the question is after this, okay, do things kind of settle back to normal? So initially here, we're looking at this as some buying opportunities. The idea with this is that you get the one-day flush, and even if ultimately this is the top and, you know, Facebook's going down from here, typically in a scenario like that, you're still going to come back up and kiss what was support, now resistance, goodbye, and then roll over. So by buying stocks here, the idea is either we can flip them out back to the mean, or we get a one-day rally that takes us back higher. And how do we measure that, and how do we look at that? Well, from there we're just going to be looking at the internals. So if we look here today at the internals, even though, again, saw like a kind of a bloodbath in stocks like Facebook, the ticks were doing nothing. It was actually a very quiet day. Okay, so that's a lot different than what I would call a risk-off day. And a risk-off day is when you see broad-based selling in all the sectors, in all the indexes, and money's flowing into bonds. It's flowing into yen. It's flowing into gold. Well, today, if we look at that, in fact, let me just structure that out right here real quick. So this is what a classic risk-off day looks like. So you get broad-based selling in stocks, and then money pouring into the dollar, the yen, bonds, and gold. Okay, so that's what a risk-off day is. Now, risk-off days are pretty nasty if you wake up and you're 100% long the stock market, because this is everything's getting sold. It's throwing out the kitchen sink. Money's pouring into safe havens due to uncertainty. And I don't really remember what was going on here. It may have been, you know, a North Korea missile or something like that. But that is your classic risk-off kind of a day. Okay. Whereas risk on, you'd see stocks up and then dollar down, yen down, bonds down, and gold down. Okay. So now we take a look at today, and we know the Qs were down, right? So the Qs came down pretty hard, but the dollar was quiet, the yen was quiet, bonds were down, okay, and gold. So it was. So anyway, again, it goes back to you had a very, very quick and violent asset allocation day as we near the end of November, kind of some month-end moving things around, and now the stock market's back and open for business. And for those of you following Bitcoin, also its first major topping tail that I've seen, where today we hit breached into the 11,300-ish level, and then just sold off pretty hard. It's a question we can see a little bit better here if we're looking at, say, a 30-minute chart. And this is the kind of volatility that you kind of, you know, again, this is something where we all have seen that this has come pretty far, pretty fast. We've been actively trading Bitcoin, Ethereum, and Litecoin, and it's great. This is purely psychological. When it gets to a point, it's come too far, too fast, and you know, this isn't so much reallocation, but this is what's happening. What's happening in Bitcoin is fascinating because remember, there's now 13 million accounts, at least at Coinbase, trading this stuff versus, you know, I think it's something like 7 million accounts at Schwab. I may have those numbers wrong, but I do know that there's now more accounts at Coinbase than there is Schwab. And think of all the people that are being affected by something like this. So pretty fascinating. If you have been trading long enough and understand the psychology here, this is where it gets pretty fun. And just a reminder, and it's interesting the way the markets are shaping up here, this is going to be a very relevant webinar. I mean, specifically exactly for how the markets are shaping up right now. So I'm going to be doing a free webinar Thursday night at 7 o'clock Central, and that's of course 8 o'clock Central, simplertrading.com/haystack. And it literally is a very, very quick way to go through. And I like to focus on ETFs and something like this because what we're looking for is kind of all the ETF that are out there, where is money getting ready to flow into? Okay, we just saw today that money flowed in very, very hard to XLF, okay, and out of XLK. What if you could plan for that in advance, right? That's some of the stuff that I want to look at. But also just kind of showing when all the forces are kind of coming together and getting ready to flood one vehicle. Now the same strategy can work for individual stocks, but it's what's fascinating about the ETFs, of course, because an ETF, it impacts an entire sector. So you can have a lot of fun with that. We're also going to be talking about how to hedge in this type of an environment, and also understanding your portfolio risk at any given time in relation to the market. What's going to happen if the NASDAQ goes down 2%? Is, you know, how hard is your portfolio going to get hit, or is it going to be okay? So it's going to be a fun webinar, a lot of aha moments out of that, and looking forward to seeing you there. All right, you can sign up right here, and you'll get all the info when it's ready to go. All right, have a good one, and we'll see you guys mañana.